And good afternoon. Welcome into Market Talk on this Tuesday, April 19th. Great to have you with us once again. I'm your host, Jesse Allen. Thanks for making us part of your day. Find us online. MarketTalkAg.com is our home on the web. MarketTalkAg.com is where you could find us. All of our social media links, streaming sources, radio affiliates, and much more. It's all on our website. Well, in today's trade, it was a fairly quiet day. We saw a little bit of a pullback in the winter wheat markets despite declining conditions in hard red winter wheat country. Corn down a bit. Soybeans, call it fairly mixed on the day, but still plenty to discuss. And helping us go through the market trade today, our good friend Matt Bennett with agmarket.net. Matt, good afternoon to you, sir. And after yesterday's fireworks, fairly quiet day throughout the grain trade on Tuesday.
Yeah, no doubt. Pretty quiet. The thing is that overnight we actually came in and made new highs on several contracts. Closed lower. I know we were only down. I guess July down 8 cents or so. I'm not seeing a settle, but that's the last trade that I'm showing. But regardless, whenever you go up and make a new high and then you close lower on the day, it's definitely going to catch the attention of a lot of folks. But on the flip side, it's pretty tough to sit here and get too down on these markets just yet. There's just so much up in the air. There's so much to talk about. Not very many wheels turning in this part of the world, and so that makes a big difference, especially in a year whenever you really need to produce pretty strong as far as your national production goes. Yes, I could have saw some acres maybe swinging back into corn if you would have had a really good early stress-free spring, but those don't seem to exist anymore. So kind of a quiet day. I don't. What I'm saying is there was reversals, but I don't know that I would read too much into them just yet.
Now, with yesterday's action and the new highs again overnight, do you think some in the trade are maybe putting a little bit of a weather premium in here, even though we still got plenty of time to get a crop in the ground? Do you think a few people are maybe getting a little scared, and that's what's helping drive some of these prices higher?
I do. I think that a couple of different things. Whenever you again. I think it's very conceivable looking at late February to this time frame. The way the corn markets rallied versus beans, there's no question it's done everything that it could ever try to do to try to buy acreage. I mean, you're looking at these corn, you're down 4 today and you're still, within a nickel of 750. And we haven't even planted corn yet. I mean, we've never experienced this before, quite frankly. And so, is there incentive to go out there and spend $1,575 to $1,600 on anhydrous? Yes, there is. The problem is you got to get in the field, and so yes, there's going to be a little more weather premium this year, I think, than normal. You look at 2019, a year when the market, got super excited about it, went out and tried to buy some acres, and then we found out, we can still produce a pretty decent crop. Now, I will say that 2019, I don't want to hang my hat on it too much because I think the government wildly missed the size of that crop, which was a tough one to gauge, quite frankly. But there's no question there's some weather premium coming in. I think on a day like today, whenever I saw the noon maps for Brazil, I'll tell you what, it makes me a little cautious to get too down on this corn market because it's starting to dry out, first of all, and then the 2-week forecast does not look favorable for safrinha country. So I don't know. If you can't catch a rain and finish that crop well, and that safrinha crop isn't the monster that everyone thought it might be, I'll tell you what, Jesse, it's this thing could get pretty darn interesting.
Well, and you mentioned, close to 750 on new crop December corn and old crop testing and looking like it held the support levels around that $8 mark today. And that, the $8 mark in old crop corn was kind of a psychological barrier. We blew through it on Monday and got a lot of people talking about those record highs back in 2012. I mean, do you think, looking at the trajectory of this corn market, that it's realistic that we could take out those record highs, Matt?
Yeah, I mean, we're not far away now. So I've got to think that there's a pretty decent shot, especially, like I said, you come in here over the next couple, 3 days and maybe go in over the weekend with the forecast in Brazil not changing. I mean, I think people have to understand that it's crunch time there. It's if they finish dry or if they get dry this time of year, you got to think about the fact that they're pushing on their dry season already. And so that's always a concern with this safrinha crop is how's it going to finish given that once they pollinate, typically the dry season's right around the corner. And so that's a big reason the Brazilian producer, they want to get the crop in the ground as fast as they possibly can once that first crop soybeans. I mean, we've all seen the videos, the combine running through the field and then they plant corn right after it. And it's a pretty amazing thing that they do down there. And this year, hey, they got it by without a hitch, but we all know that La Nina is still in place, and it hasn't completely gone away. And so with that being the case, La Nina many times in Brazil will bring on the dry season for that safrinha crop a little earlier than what they typically might see. So I don't know if that forecast is going to hold or not, but I'll tell you what, if it does, you go into the weekend this weekend, and there's going to be some nervous people that are trying to short this market because, yeah, I mean, it makes sense to short a market whenever it's pushing on all-time highs, right? But on the same token, you make all-time highs, and then you've all of a sudden you've opened the door, and there could be you can make a case for all kinds of neat prices. But and so right now, I think as a producer, you're stopping and looking at this. If you've got old corn sitting around, hey, you've treated yourself really good doing so. I don't have any problem with you having some gamble bushels, but I mean, reward the market with $8 corn. I mean, I don't know why we wouldn't do such a thing. We're still sitting company wide, we're still sitting on 30% of our old crop, and we're getting an itchy trigger finger, quite frankly. I haven't made any official moves yet, but by all means, you can't go wrong selling here. You just can't. I don't care if it goes to 10. You can't go wrong selling $8 corn.
Well, on the flip side of that, I know you and I are both on Twitter, and I think I saw someone on a thread of yours today talking about selling even 23 corn.
Mm-hmm.
I mean, looking at some good prices, 23 corn, 23 beans. I mean, what does a producer do long term? And looking new crop next 2 years or so. I mean, do they look at making a sale that far out? Is that too big of a risk just with all the good value that's here right now?
Yeah, I mean, what's the first thing a person's going to say to you, Jesse, if you say, hey, I think we should look at 673, 23 corn? They're going to say, I don't know what my inputs are. Hey, I'm right there with you. I farm. There's no question that inputs are extremely important, obviously. But at the same token, you've got to ask yourself, what's the function of the market? Function of the market is to run prices high enough to either scare away some demand or encourage supply to bridge the gap that we're all worried about being bridged. Now, is that going to happen overnight? Yeah, maybe not overnight, but I guess the way I look at it, if I start plugging in today's elevated prices for fertilizer, which obviously people feel like the flow is going to go a little bit better. The hurricane last year really disrupted stuff. Whenever it got into anhydrous production, it kind of affected the price there. A lot of people think that we're going to be able to get some dry fertilizer out of Canada. Regardless, are we going to have supply? Yeah, I think we'll have some supply. If I plug in those elevated prices, and then I use 670 plus these 23 corn as a basis, I'll tell you what, or the basis for my price, I can pencil a lot of profit there. And so, stepping in here and selling 10, 15, 20%, as the market rallies, I think is just a no-brainer. I think that it makes a whole lot of sense to at least get a start. Now, are you gonna be $1 too low when it's all said and done next year? Possibly, but you look back to a year like 2008, and we were kind of trading like this in 2008. The rally didn't come as intense this early, but I'll tell you what, we moved up and we moved up and we moved up into that pollination time frame. And then the market absolutely was lambasted going into expiration on D's corn. So from about the 10th of July or so to expiration on D's, I'll tell you what, you drop the market $5 a bushel. And so don't think that sort of activity can't happen. I'm not saying that fundamentally we shouldn't stay up here. Absolutely. But at some point, Jesse, big money is going to get tired of the story and they're going to start thinking, they're going to look around and say, hey, where can we put our money, and be able to do well with it? That may happen 18 months from now. It may happen 2 months from now. I don't know. But as a producer, if I can lock in 670, I haven't had a chance to do that very often. I think that it's probably a smart thing to at least consider.
Well, Matt, as well, looking at the wheat market, winter wheat kind of took it on the chin today out of everything. I was a little surprised with that, just with the condition ratings declining again. Do you think it was maybe a little profit taking, or what happened in Chicago and KC wheat today?
Yeah, I think there's a little profit taking. There's also some forecasts trying to inject some rain into that part of the country coming up. like in the 8 to 14-day forecast. And so, I've talked to a few producers in that part of the world. They say, man, I hope we get it, because if we don't, uh, we don't really want to have to irrigate just a plant. I've heard that from several folks out in Kansas and Nebraska. And so if they've got to irrigate just a plant, that's not a good sign, especially for their dryland stuff. And so as far as wheat's concerned, they're in dire need. You're right. Conditions aren't very good. And quite frankly, there's some areas that good soaking rain, I don't know that it's going to do much good anyway. And so I'm with you, but at the same time, wheat market here of late has had a pretty good run. And so I would probably go along with your first line of thinking, which is a little bit of profit taking. You throw in that, some rainfall, and it's certainly going to help some of the crop. There's no question about it. But at this stage of the game, the wheat market looks content that maybe we ran as hard as what we want to run it, at least for now.
Well, I know in the grains today and the softs, the market that really took it on the chin was the cotton market, and I know we don't really talk about that, but that one that stood out to me a little bit as I was looking through the quotes here today, Matt. Just an interesting anomaly on a Tuesday to see the cotton market down so hard.
Yeah, absolutely. I mean, whenever it comes down to it, the cotton market has also been on quite the run for quite some time. Then you start going down and trying to test some of your moving averages, on a day when you're going down $5 or $6. And there's no doubt that there's going to be a fair amount of longs that on a move like that, it's going to say, I think I'm just going to go ahead and move this to the sidelines for the time being. And so there's some speculative money that likely exited the market today. But still, with cotton, it's done, in my opinion, a similar work that corn's done. Tried to buy some acres. You look out to December, and there for a long time, people said, well, yeah, you've got triple digits on the front month, but D's is still under $100. And, that's not the case anymore with $115, $120 cotton. So I still think that this cotton market, it is plenty rich here. But at the same time, you can plant all the acres you want to down in Texas. And if they're not irrigated acres, given how dry they are, they're not going to grow anything. And so I really hope those guys and gals get a pretty good shower in there, because I've talked to several of them that have said, it's as dry as what some of them can even remember. And so that's pretty strong talk. That can change with a couple of storm systems. We all know that. But again, you can plant all the cotton you want. You better get some rainfall, or you're going to have issues growing it.
Well, cattle took advantage of the lower feed prices here today. I'd call it a fairly moderately higher day in cattle trade. What's your
Yeah.
thoughts with what you saw with the live and feeder cattle trade today?
Yeah, and so you've got that front month fat, you're over 140 again. And that's something I think you and I probably talked about the last time. I think we were down in the mid 130s, and I said I could see mid 140s up to 150 again, probably in the summer time frame, especially late summer time frame. I'm afraid some of these cattle are going to exit some of these lots just due to the ability to feed them and make money. So some of them might come in terminal a little bit earlier than what we'd want to see. But that's going to lower the numbers. So later on, the payoff might come later on, So I think you could see some lower weight cattle hit the market. I mean, feeding $8 corn is no fun for anybody. Last year, you had cheap feed wheat to replace this corn. As you and I just talked about, there's no such thing as cheap wheat right now. So I would like to have seen the feeders maybe take a little more advantage today. With the corn market just backing off a little bit, but quite frankly, backing off at $8 isn't exactly a huge gift. So I'm not surprised. I am not surprised as well that your fats are staying, what I would say, fairly well supported. And I think moving forward into the summer time frame, again, fats are going to be good property. I think the rest of this calendar year, overall, I'm not saying we're not going to have some dips, but I really think that your fat cattle market is going to be good property.
Matt, as well in the hog trade, saw a little bit of spreading between those front month and back month deferred contracts. Any thoughts on the hog market?
Yeah, I mean, there'd been a enormous carry at times in this hog market, and then right now, I mean, you look, you're 114 down to 122, and so there's not much disparity there. And so what I think you got a little bit of carry in this hog market, but quite frankly, demand is strong. I mean, we know the demand for protein is strong overall. Numbers are an issue. I don't think anybody knows what our numbers are going to end up being like here in the U.S. We've obviously, and in Mexico, there's been certainly some disease issues that we've got to worry about. But moving forward, I think similar to cattle, I think that hogs are pretty good property. I don't know that I want to be a buyer at 120. Quite frankly, that seems just ignorant to me, but at the same time, I would have said the same thing about $100 hogs. So yeah, I think they're a fairly good price. I think an independent hog producer, probably can still make money at some of these levels. You get on out 3 months, but at the same time, I think we at least need to have some sort of protection in place, because at some point, if people do get tired of this hog market as well, I think the same thing can happen as what we've talked about with the other commodities. If you lose interest, I think you could take quite a bit of air out of sales pretty quickly.
Also, Matt, energies, crude oil down over $5 a barrel here as we're talking. Natural gas hit 13-year highs yesterday. It's down a little bit. What's your thoughts on the energy and or macro side here on Tuesday?
Yeah, I mean, when you look at the energy side of things, there's no question we've been overcooked just a little. I mean, this nat gas market has just been on fire. I've seen, we had a couple of guys, several people who irrigate said, "Hey, we can't see this nat gas get completely out of control," and wanting to buy into the nat gas market, and that's a sketchy thing at times. But as a hedge, I can go along with it. Looking at the profits that a person made just in a matter of a few sessions is incredible. And so when you see that happen, you got to stop and think to yourself, you're not the only one buying that gas. There's other people doing it too. And you wake up and your account was, 25,000 5 trading days ago, and now it's 160. I mean, people are going to take profit off the table. That's just a simple fact of the matter. And so, I thought that the outside markets were very interesting today. We could have gotten beat up a lot harder, in my opinion. With this crude oil market getting hit the way it was kind of nice to see that your Dow and Nasdaq actually had pretty strong showing, especially as we speak. You're up 375, I think, on the Dow, and so it's a nice thing to see. But I think energies, you're trading energies, you're growing energies if you're a producer, and so you have to watch this energy market and watch it close. Last thing I'll say on the outside markets, this dollar just continues to run. So you're 101 as you and I talk. Right now, it's not that big of a deal. You're raising interest rates. There's a whole lot of different moving parts. But at some point, we've got to understand that if you get the Black Sea region figured out one of these days, if Brazil ends up getting the rain and raising a big crop, and next year, they're going to come at us with more acres. A strong dollar is not what we want to see as a U.S. producer, because it's certainly going to inhibit our ability to be able to put some of these products out on the world market at a competitive price. And so right now we're able to withstand it because everyone else has got bigger issues than what we do. But I tell you what, it's something that we certainly don't want to be cheering this dollar to go even higher.
Well, Matt, great stuff as always. Any final thoughts you have for us on this Tuesday?
Just don't lose your perspective. I know I say it all the time, but I'll tell you what, Jesse, these markets are phenomenal. And don't be the producer that says, I don't want to sell $8 corn because it might go to 9 and then write it down to 6. You know what? If you don't want to sell, that's fine. Tell the person that you're going to be selling it to, this is the least I'm willing to sell for. Write it down, please. Hold me to it. I'm not saying where the bottom's going to fall out, but whether it's old crop or new crop, manage some worst case scenarios, leave the upside open, stay flexible. And if you lock some of this in, you're going to have one heck of a year.
Well, Matt, I know if producers need a little help managing their risk, if they need someone to hold them to a certain number, I know you and the team there at agmarket.net can do just that. And I know they can reach you guys via phone or on the website or via your app in the App Store or the Google Play Store, can't they?
Yep, absolutely. Just hop on any one of those places and you can get to our contact info pretty easy.
Agmarket.net is the one-stop shop to find out all the contact info. With that, Matt Bennett, appreciate the time. Thanks for joining us here on Market Talk today.
Absolutely. Thanks for having me.
Matt Bennett with agmarket.net, our guest today on Market Talk. That's going to do it for the show on this Tuesday, April 19th. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.